We should start in a minute.
Hi. Hi.
Good afternoon, Vishal. How are you?
Yes, hi, Apurva. Good afternoon. Hi, Nikhil.
Hi, Vishal.
Hi.
So we have a good number of people. Should we start, Nikhil?
Yeah, absolutely.
Great. So welcome everyone. Good afternoon. My name is Apurva Sheth. I am the ED at Imarticus and I head the corporate business. Over the years, we have engaged actively, not just with our clients, but with market leaders to understand the upcoming trends in technology, especially in the fields of financial services. We have been hosting these short sessions with industry leaders to understand the fast changing global landscape. Today, the topic for discussion is digital transformation in banking. Activities that were traditionally carried out in person have now transitioned online. And this phenomenon is particularly apparent in the world of BFSI, as banks and financial institutions fiercely compete to establish themselves in the digital banking ecosystem. A tsunami of online financial tools and technology has emerged. This has led to the so-called Fintech and digital revolution. The industry is now ranked amongst the fastest growing sectors in India and the world. The fierce growth comes with its challenges in getting the right talent as well. We will be discussing that as well here. Let me not waste much time and introduce both the speakers. Nikhil is the co-founder of Imarticus. Over the last 7 years that we started Imarticus, we as Imarticus have moved from one branch, one certification company to proudly we can say now that we have 15 branches within India and Asia, and with a portfolio of over a dozen industry-endorsed programs, both online as well as in offline space. Over last 7 years, Nikhil has positioned Imarticus as a strong B2B player as well, and we now deliver customized bespoke learning solutions again in online and offline format in the verticals of finance, analytics, technology, and leadership. So we cover more or less each and every training requirement of corporates in India as well as Asia. Nikhil began his career as a corporate finance in a corporate finance division in Lehman, New York. And then he moved to India to set up Lehman's offices in India. He moved out of Nomura to start Imarticus. Vishal Tulsian, Vishal, thank you very much for being here. He's the CEO of Bank Amar, Indonesia, and he has worked in C-levels in various businesses, including few turnaround businesses. And he has founded the first fintech company in Indonesia way back in 2014 called Tunaiku. Sorry, Vishal, if I get the pronunciation right, please correct me if I'm wrong.
That's correct.
Bank Amar positions itself as a digital bank that focuses on the retail and MSME sectors. Vishal's career ranges from working in corporate finance divisions of Aditya Birla to S&P, and he's spent several years being an entrepreneur himself. He's the authority in fintech and digital revolution in Southeast Asia, and has been a keynote speaker on various forums and seminars. He's the listed mentor on One Crowd, as well as an advisor to cryptocurrency-based marketing automation platform called Retainly.co. Over next 1 hour, we will be having an engaging conversation between Nikhil and Vishal for approximately 40 minutes. All the guests, if you have any questions, we would be more than happy to answer them. Please put them on the chat session. So over to you, Nikhil and Vishal. Vishal, once again, thank you very much.
Thanks, Apurva.
Vishal, thank you for doing this. So I know Vishal for a bit now, Vishal, let's start with a little bit of background. How did you end up in Indonesia? How did you was from a career map perspective? Is this what did you as you were doing your CA? Did you think about this is what you want to do, run a digital bank or run a bank, etc.? Walk us a little bit in terms of what has led you to what you're doing today? I know from my personal this that you study a lot, right? You have certifications. In my past conversations, you've asked me questions like, where do you go learn more about AI? I think this was 4 years ago or something like that. So tell us a little bit about how it's come to this. So how have you ended up here?
I think it kind of, yeah. So thanks, Nikhil. So it is not, it wasn't planned that way. It kind of segues into one thing to another. Primarily, as you mentioned, learning different things. So interest in digital side was quite active. I used to live in Estonia where digital side is already very active. So quite a bit of learning over there. So then from Estonia, I moved to Indonesia. Over here, we were looking for that where there can be digital disruption. That was the angle, right? And the whole angle always has been that when I lived in the western part of the world, I saw that the technology usually over there is used for efficiency gains. But coming from India and Indonesia not being very different from India, realize that the technology in this part, more than efficiency, needs to make an impact in the lives of people. So that's how the idea that where we can make the most impact was that kind of a middle to lower segment who are not able to get loan funding from anywhere else. And their life course changes if they go to the loan sharks and all. That's how the idea of Tunaiku, which in English means my cash, came up, that can we lend online? But most important was that how do you do the credit assessment online? 2014 digital connectivity was not that great, like things were not digitized that much in terms of the database and all. So that was the challenge, but that's how got into it. One thing led to another. This journey led to bank acquisition then led to digital bank.
And Vishal, as you you worked in a traditional bank in your past, etc. And inherently, tell me a little bit about what are the drivers from your perspective for this digital bank. So obviously this must be the overused word of the century. I think digital banking. Everybody has a digital bank. Everybody's doing digital banking. Walk me through a little bit in terms of what is it, and no, not in the simplistic nation, but how is it different, and what are the drivers of this particular from a economic perspective?
So if you see, banking per se has been quite advanced, like as a sector throughout the world, has been quite advanced in technology side. They would have the ATM network and all those. Back in 2008, when the crisis happened, Lehman crisis happened, after that, regulators were quite focused on the banks, and banks were quite focused on meeting the regulations. And that was the time when you have the smartphones coming up, and also at the same time, Bitcoin type of currency, blockchain, new technology came up. So there was a confluence of few things happening. And that time when the fintech kind of grew, you had the first P2P players and all. So if you may say, democratization of the finance started to take place since then. Before 2008, when you say digital banking, it was just like an online banking, that you can do the things online. You had the internet back in 2000 itself, you can start doing something, online transfers and all. Bit more friction, but that was it. But after 2008 and 2008 onwards, it became more on the mobile phone. And that's where you see a bit of the change in the model. So it's a wide word, digital bank. The moment you are able to do it online, it can be called digital bank. But to be really digital in terms is that, can you onboard the customer, like can you do the KYC digitally? One of the highest friction point. Transfer and all was possible already back in 2005. So the drivers of digital banking, if you see in case of Western world and Eastern world, a bit to different drivers. In case of Western world, the drivers again were more of the convenience. That is the journey becoming more convenient. In part of the Eastern part of the world, you have a large underbanked and unbanked population. And you have a lot of young people coming into the age of having a bank account and all. So drivers over here is more as a first time onboarding a customer. So the KYC becomes a very important factor in eastern part of the world, where you bring the customer on board digitally. That customer has never seen a physical branch. But in western part of the world, you will still find most of the people have seen the physical branches and they're just looking for convenience.
Vishal, about consumer behaviors, right? One clearly was like we do more and more of our stuff on our mobile today. Everything from ordering something to most things I think are done on mobile. From a consumer preference perspective, what is the current consumer looking for from an experience perspective? And more in terms of, what is it's coming from the fact that the traditional banking is maybe not, for example, I read a report that, branch banking in the US is seeing a massive decline, right? And obviously the idea was, look, you put as many branches up, the bigger your bank is, and why, etc. So how is the consumer preference changing, if you will?
So it's one of the things is age-wise. The millennials and all who have got more used to, let's say, WhatsApp type of user experience. So their behavior is that they would want more instant everything. They are currently not looking at most of the millennials and Generation Z. They are not looking at the security aspect much. The next generation usually would be again looking at the security of their deposits. So they are still so the people who are still visiting branches and all would be looking at bigger loans for their businesses and all. So two types of different behavior you see. So if you may put it like internally what we look at it and we are still observing it, while a lot of conversation goes around millennials, that millennials are behaving a certain way. But one theory which we have is that maybe it's not just about being millennial, it is only about being that when they were born with already the internet and the mobile phone around them. So they kind of got into that kind of habit. Would their bank official behavior change once they cross a certain threshold of net worth? And that's what we are observing, is that a certain level of net worth makes a person more cautious of choosing the bank. The brand name becomes important. Where will they going to put the money? So it should not be that simplistically divided between a millennial and a non-millennial, but it should be looked at more from the customer own life journey point of view, where they are in terms of their financial net worth. So that's one of the most important things you will see in the terms of the behavior. So people with net worth, still the behavior is quite a bit of similar behavior. They are cautious. They would like to choose the bank which has a good branding. They would like to keep the deposits over there, and the financial instruments also they choose are a bit more on the cautious side than on the millennial, which would be maybe going for a higher yield to P2Ps and all.
Changing tack, Vishal, should we short all traditional bank stocks? Do you think that I read a report that Google, Amazon together are going to own 50% of the $1.3 trillion market in financial services market in the US alone. Should we be? What do traditional banks do? And maybe also and transition to how did you think about it, because you came from that and then you started a digital bank specifically in Indonesia, so maybe marry the two.
Right. Yeah. So what we did, and then I'll come to the this. What we did was mostly we started with a fintech product, and bank also what we call ourselves is a more of a technology company with a banking license. The reason why we did this way is we had a view which was contrary to the market view. Possibly 4 years back or 3 years back, you would recall there were a lot of seminars which used to focus on the topic, will fintech disrupt the banks? And there were a lot of conversation that banks will be disrupted. That's back into the 4 years back. Our view was that's not going to happen, mainly because regulation is here to stay. Regulators are a bit slow in, let's say, responding, but once they wake up, they will be here. So it's better to be a regulated entity than just an unregulated business model. And that's how we purchased the banking and bank license and went forward. So coming to that question of should we short the banks? Now, if you take the regulators out of the equation, then the answer would be yes. Very difficult for any banks, big banks like your Kotak or HDFCs and all, to be able to fight against the likes of Amazon and Facebook. Very difficult because they have the brand. People will be comfortable depositing their money with Facebook and Amazon, and they have the convenience and they have the database. But the key assumption on that would be, regulations will be gone. And that's something is not going to happen. Because that is when people have to deposit, when the small depositors have to deposit the funds, then that's where the regulations come in, that it needs to be protected. And in case of the big tech companies, as you have seen, that the antitrust can anytime take place the moment they grow too big, as we had the antitrust hearing just yesterday, I think. So that is why what you need to see is that the banks which are able to kind of disrupt themselves, create a model within themselves to be able to adapt to, say, open banking, let the fintech companies tie up with some of the fintech companies and all. Those banks would eventually do well. Means they will be able to change. But if the banks are going to serve with the old model itself, yes, they will find it very difficult.
Vishal, you talked about regulators, right? And you're right. I mean, they are a key sort of stakeholder in this particular transformation, etc. How comment on regulators, and maybe in the US or even in India, how are they doing, and what is your view in terms of how should they be seeing this, etc. I think sometimes regulators see this, look, too much is changing, so let me put some brakes somewhere so that I get a handle on the entire ecosystem. I feel like the regulators in the US versus the ones in India, obviously, the ones in India are a lot more conservative. But maybe you can comment on in terms of how should regulators see this particular scenario.
One trend which you will see that overall throughout the world was that between 2008 to 2015, 7 years, regulators were only focused on cleaning up the crisis and getting their acts together, because a lot of quantitative easing and all have taken place. And why I say this, I picked 2015 January, because that was the time when there was a big P2P case, Ijubao, happened, which in China, where around $6 billion were missing. And Chinese government cracked down, Chinese regulator cracked down on all the P2P industry. Since then, if you see throughout the world, the regulators have kind of woken up, and there is a regulation around fintech. Before that, before 2015, there were many countries where you can open a P2P business without any regulation. Now, after they have woken up, the case in point you can see is in terms of Bitcoin. Before that, you would never see throughout the world's regulator acting in cohesion against any particular threat. They looked at Bitcoin as a threat, and if you see, majority of the world regulators kind of banned it. Had it not been there, means the prices has already skyrocketed, right? It reached to 18, 19,000 per Bitcoin, and because of their clampdown, the prices came down. But what it shows is the regulators kind of joined hands throughout the world. So coming to that country-wise, you will see that regulators are approaching it differently, but what I see is that each regulator is talking to their counterparts in different countries. So Indian regulators and all are looking at the example like what Singapore MAS is doing. Indonesians are looking at MAS, and MAS is also looking up at FCA, what UK is doing. So there is a kind of a grading. So UK, you can say, is very advanced in terms of the regulators. They have been taking a step forward. So they have set up already quite many regulations. And I see most of the regulation, whenever they want to adopt something, that's where they look up to. Then with the UK, in Europe, if you see, open banking regulations are already in place. So similarly in India, they're already started talking about open banking in this part of the world, and that's where they refer to. US in this aspect is not as, regulation-wise, is not as forward as you can see in UK and Singapore. So these are the two countries which usually one can look up to for regulations. But going forward, you will see all the regulators will match because of the technology. Globalization cannot be removed that easily.
When Vishal, when you started the bank, the digital bank, if you will, what are the building blocks that you thought of, and what were the different stakeholders? I know, I read that you've obviously tied up with technology companies, like you've tied up with Google Cloud and a few other sort of. But what are the building blocks of building such a? And tell us a little bit about the experience.
Right. So when we looked at digital banking, so first, as we started lending to our customers are mostly like in segment B and C. They are underserved and underbanked type of segment. We met with them. We asked them that, hey, listen, like, why you don't open a bank account? Like, what stops you? So kind of a meeting and going to their places and all. What we found is that it's not that they don't want to open just a bank account. One of the biggest friction was definitely that they ask for a lot of papers, which they usually do not have. But then they explained that, hey, listen, if I open a bank account, after that, what should I do? We still were not able to get that. What is the pain point? So going to like few of their houses, that's where we realized the real pain point. And it was kind of a trend which was emerging. For an example, like everybody over here, every participant over here, you and me, when we have to plan something, any kind of travel or any big expenditure plan, what do? We take our tool like Excel or a spreadsheet, any tool, right? That's the tool which we use. We plan it, we can forecast it, and we also have more or less a little bit of, let's say, certainty in the cash flow projections. So it's an easier job for us to project. You want to do for education, you have an Excel spreadsheet, one column for education, child's education, something for travel, those sort of things, right? But this is not there in your bank account, right? It's there on your Excel spreadsheet. Now, for these people, this segment, if you think their income is right now not certain, someday high, someday low, number one. Number two, they don't have Excel spreadsheet. I mean, they don't use that tool for obvious reasons. So how do they manage their cash flow? So what they do is something known as jar economy. Like they would have 2-3 jars marked with education, hospital, food, like that. So they come, put into another jar, whatever is left over, they have a system like that. When they open the bank account, then all these 3 gets merged. Now there is no way for them to manage it. And that's why it's much more comfortable for them to keep it at home. And that's how we thought, okay, so that makes sense, that if we have to go to these people, then we cannot just provide them an accounting statement. So the account which we have opened for them is just like jar. They can kind of keep it this much amount, like my goal for education is whatever, yeah, 2,000 rupees, 10,000 rupees is there. And for travel, for any kind of religious travel and all, this much goal is there. And then their account, from that they can make it automated, or they can keep on transferring, where we will send them the notification that, yeah, your goal is this much, you should be saving this much in particular jar or bucket, if you may say. So that's how we build it. So the building blocks in that was clear for us that current banking is providing more of a accounting statement. It's a financial statement as of what you have. It's not providing intelligence, right? So that's the key difference which we created, is that we started thinking that we got to provide the intelligence, and that's where what kind of IT architecture should be in place. And that's where Google Cloud and those comes in place, because they have the scalability and the artificial intelligence also inbuilt. So that was one of the key building blocks. Another was that the user journey, definitely one of the, how do we envisage the user journey? Should it be the similar as they are doing, or completely different, that we don't think from the what is written in the regulation only in terms of the KYC, but first think that how do we marry the regulation and the user journey? So these are the key, let's say, foundational blocks on which we built the whole system.
Vishal, earlier you talked a little bit about traditional banks partnering with fintech companies, and the ones that will succeed, for example, are the ones that will open their doors to fintech companies. How did you do that? Did you, because you had a banking license as such, do you not need traditional partnerships, or is that something that you see yourself partnering with these banks going forward?
Right. So, what we did is that we are also partnering with other banks and also with the fintech companies. So we don't have to create all the product ourselves. So as an example, say if an invoicing product is there, and I see that a fintech company is doing a much better job, then instead of trying to create the full product for ourselves, I'll rather just tie up with that company. So our customers are getting that service, yeah, and we are just getting a fee income on it. We're not putting the capital behind, but we are getting the fee income, and our customers are getting the service. So that's one way to tie up with the fintech. And in case of tying up with the other bank, what we are providing them also is that kind of loan as a service, banking as a service. So they have their website, and this Tunaiku loan can appear on their website, so their customer can get loan from Tunaiku. So they don't have to build the whole consumer loan algorithm and the system by themselves. So there is a lot of these kind of like strength partnerships can be done.
So Vishal, product I get, right? Partner with the right specialist, bring them on to your platform, give them access to your distribution. Talk to us a little bit about maybe customer acquisition. How digital banks look at customer acquisition, or how you look at customer acquisition, etc. Is it going to get cheaper to acquire customers?
So customer acquisition is one of the highest costs in the whole journey. That's the cost is quite high in the beginning when you are acquiring a new customer. And that is why the traditional banking has always evolved around share, like the full ecosystem, providing a customer everything and not go out of their ecosystem. That's how the whole journey has been designed, especially because of the physical infrastructure, the cost of acquisition for a traditional bank is even higher. Now, in case of digital, for us, the cost of acquisition keeps getting lower as the people start using your product more and more. So what it does is that it gets your ranking better on ISO, gets your ranking better in SEO and all, and then also you're doing a digital spend and you can digitally onboard. So your cost of acquisition of a customer is lower. And that's the one of the advantages which digital banks always would have, is that when they provide any service, a fee-based service, tying up with any other fintech, it plays out quite well, because acquisition cost can be recouped within a period of a year.
One of the things that comes to mind for digital banks is obviously the flexibility, right? And innovation that a bank has to be, etc. When you run or create such a bank, is it structured? Is the org different than a traditional bank? How do you think about that, and how do you think about setting bank? Because the traditional bank said, look, you need a chief risk officer, you need this, you need that. It was fairly defined in that sense. How do you think about organization structure? How do you think about leadership in this framework?
Right. So one of the issues which would be there in that is the rigidity of the regulation-based structure and what you would need to be able to service a customer better. So you have to find again a balance in that. Chief risk officers and all, yes, those positions would be there. You would need the specialists in terms of the collection, fraud, your IT-related back office, in terms of the core banking and all. The difference would be that taking the word like this agile, which is applicable usually in an IT function or IT division, think about it, the structurally making the agile the whole organization. So what it means is you would have the structure made in a way the kind of people you will take are able to do few various things also. And based on the project, you can create a new structure just for the project, and the existing structure also works. So just like you form a squad in IT, you form a project base where you take in the people from the various functions. The biggest difference would be that in traditional bank, you will have silos. It's a very tight kind of silos where one part doesn't talk to the other part much apart from the information sharing which is required. But in this digital banking structure, that's one thing which you cannot live with. There cannot be any silos. And second difference would be that in a traditional banking, very, very difficult. Most likely you won't find the senior executives talking to the customers themselves. And in a digital banking, that will be that is quite essential, that you need each and every level talking to the customer pretty frequently as every week, because customer pulse is very important. When you provide digital banking, you need to make small iterative changes, and that can only be thought about if you are constantly in touch with the customer.
And Vishal, does that then translate to your hiring requirements are different? For example, Goldman had this that 50 to 60% of the people will be technology background. Does that translate for you too, to that you're looking for people with a certain maybe product and technology mixed background? Is that what you're looking for? Because earlier, if I had told you technology people working in banks, most of us said that's not going to happen.
True. So that's what. So when you're looking at, so now more than, we will have two types of role divide. One which will definitely need a specialist. Okay? So that's just a specialist one. But another majority would be that where we would see that the person can do 2-3 different roles, can be able to. So if you are looking at, say, product guy, should he be strictly a product guy, or can he be also a business owner? So you are looking at somebody who has the technology knowledge but also understands business, then that product owner is a better product owner than a specialist just about product owner who cannot function without a business owner. So to give you an example, it's more like a Lego toys here. So, and that's the example which we use internally in the company also. If you build a car, like a toy car out of metal, say whichever, Bugatti, Veyron, it will look much better. But you build out of Lego toys, it will look Bugatti Veyron, very nice, but it won't look that sleek as a metal car. But the difference is that in Lego car, you can, if you need to unassemble it and reassemble with a different car, you can do that. So it doesn't look that great, but it has more agility, more adaptability to be able to change based on the situation which it needs. And that's how the organization structure needs to be, that it can change, it can adapt to the changing environment.
And in your experience, Vishal, and could be in Indonesia, or even in your experience in India, are these people easy to find? Or because you almost seem like you're looking for very good journalists who have lots of experience, etc. Earlier, the banks spend a lot of time trying to get a risk guy do risk for 20 years. And then the 18th year, maybe he got it right, or the 10th year, he got it right. So are these people easy to find? Do you think that we've made our hiring requirements tougher?
I think we just lost Vishal. He should be logging in a minute.
I thought he didn't like my question.
He's back. Hi, Vishal.
Hi, Vishal.
Sorry, I think I lost the connection, but now I'm back. Can you hear me, Nikhil?
Yeah, I can hear you.
Yeah, hi. Right. So you're asking if these people are easy to find, right?
Yeah.
So what I have experienced is that it's never easy to find the talent in terms of easiness. However, it's easier to mold than to take it from the Oh, sorry for that. Seems like it must be my internet connection.
Not a problem.
Right. So it's more easier to mold somebody young to the kind of role which you are looking at than to be able to find a generalist from the market. So that's one. Second is the culture of the company can allow some experienced people to mold themselves. So what we look for the people, when we are looking for the people, we make it very clear from the beginning is that the way you have been doing things. So I have like a kind of a thumb rule, 7 years. So what I've seen is that if somebody has worked for 7 years in a large corporate, in a very well-defined role, then it's very difficult to change them, unless until there are few people who really wanted to change every time. So I would usually go for people less than 7 years experience. Few exceptions we have made, yes, and sometimes it has worked, sometimes it hasn't worked. But the good part is that it works if the culture allows them to work. So that's primarily it. That is not easy, but it pays off in the long run.
Vishal, let's talk a little bit about the second overused word of the century. I think will be AI, and the third will be blockchain. I think. So I think there are and specifically with digital banks and technology-led banks, etc. It becomes relatively easier to implement some of these technologies. What has your experience been? Where have you seen this work, etc.? Maybe your personal experience in terms of where are you seeing some pockets of excellence, for a lack of a better word?
Right. So AI is already kind of in there now. Yeah, AI is already, and AI will become definitely one of the most used at the back. We possibly right now companies are overuse in terms of that they are using AI. However, you will see that kind of data like from the banking perspective or any fintech company, the kind of data they are providing one service, but AI will make it a little bit better for service for their own customers. So it's something which is already there, and it will get into each and every part of the bank. For an example, suppose you are having a collection department. AI can tell you whom to call, whom not to call. Because you always would have a X number of people you would want to optimize those calls. So that's where AI can help you. In case of chatbots, you are already using the AIs everywhere. When you are providing the KYC, there you can use the AI for the first level of filter when you are digitally onboarding. That when do you need the manual? So AI can always reduce your cost and provide the first level of filter, and then it goes to manual. So in your flowchart, that's how AI will be used. In terms of the blockchain, more than the blockchain, I think DLT, distributed ledger technology behind blockchain, is going to be more accepted within the banking. As you know, there are many banks which are already working this R3 and Corda and all. Where it will play a role more than one is an extreme backend, just that when you want to keep the records. But it will be a closed loop blockchain, so public won't even come to know about it. But what will impact the consumers is digital currencies riding on it. And that's something which is going to happen quite soon. Because of this corona situation and all, that is something which has been accelerated. And digital currencies would enable micropayments. And that's where you will see a lot of DLTs being used.
When I started this webinar, I promised myself I'm not going to talk to you about Corona because I think it's, we've all, but now that you've brought it up, tell me, has Corona made the digital banking sort of easier? I mean, clearly people can't go to branches or wouldn't like to go to branches, etc. Have you seen that push in your own particular bank, etc.? Have you seen more and more people come to the platform? How has that worked for you?
Yeah, so means fortunately for us, because we were digital before itself, we saw around 40% jump in our demand, organic demand for in the first, after like in the month of April itself. And as of now, when you're talking about pre-March levels, up to now, we are looking at 100% jump in the demand. So that's definitely helped. What we see in terms of the behavior, which we are still observing, is that will this habit change be permanent or long term, or it is just a transition based on this temporary phase. But it seems like that if you get them on board and if they get used to using it, then there is a very less likelihood of them not going back to the previous friction and not using the same convenience which they have. So it has definitely accelerated the digital adoption. People who wouldn't have adopted, like the age factor wise, who wouldn't have earlier adopted this, they have gotten on board. So there is some positive change on the digital for the digital companies.
And Vishal, we talked a little bit earlier about that, the skills that are required, etc. There are a lot of people in this webinar who work for traditional banks or who want to, start off their career in banking. Any advice and views for them in terms of, what should they be spending their time? How should they sort of get them ready for this almost a new career, right? I mean, it's not almost, it's gone through a large change. So it's almost, I can almost say it's a new banking career, for a lack of a better word.
Right. So you're looking at very young people, like what kind of very young ones?
Both. I think you'll have a subset of people who work for traditional banks, who have spent years in banking, etc., and now are going through this change, if you will. And there is I'm sure there's a bunch of people who are trying to get into this particular. Like I think when I graduated, banking, investment banking was the place to be. I'm not sure anymore. Maybe a technology firm is the place to be right now.
So the things where they can invest more time, I think, is like if you're very young and learning, or in terms of the learning hunger is very high, then on the technology side, to keep an eye on the APIs, learn the APIs. How do you connect through the APIs with the various other players? Open banking, go through the open banking, which is already there in place in Europe, because that is something which will happen soon. And if you know it very well, so connecting open banking and APIs, you can immediately make changes if you are allowed in your bank to make the changes. Another which will be a bit more going forward in the timeline wise is this micropayments and digital currencies. So how would digital currencies work? It will take some time for the people to grapple with it, that how would it work and what are the implications of the micropayments. A micropayment will create a completely new industry. Any bank which is poised for micropayments ahead of their competition will definitely have a very big advantage.
Great. Vishal, thank you a lot for your thoughts. There's a lot of Q&A, so I want to give enough time for the questions to be answered.
Yeah. So Vishal, I'll narrate the question so that it will be easier for you. There's a question from Ram H. What if financial institutions fail to maintain privacy?
Sorry, can you repeat, please? What if?
What if financial institutions fail to maintain privacy?
So it's not as an institution. Some companies would understandably make a mistake. So as a user, those are the things which we have to be always very careful with, that which kind of companies can misuse our data. So earlier we didn't used to pay so much of attention as a user, that will the company be using my data inappropriately or not. And that's something which we all have to be much more vigilant about.
There's a question from Sunil Roy. In which area does blockchain help, infra or business logic?
Blockchain helps in primarily in infra, not in the business logic. Mostly in terms of the infrastructure, it can help you. If you have a multiple branches and all, multiple locations, and you want to keep it a closed loop blockchain, that's where it will help more. Business logic wise, yet a good business model around that is yet to be there. People are thinking about digital identification, but again, that's another area which it can use for KYC purpose, but yet to be fully developed.
And part two of this question is that when a tech company runs a bank, how does it ensure good banking decisions? I think he's a banker.
Right. So banking decisions, right, for that, something regulations help, right? Regulators are always there on your head. So you are required to do many things, which as a tech company, you would scratch your head, why am I required to do that? But as the year passes by, you cannot get away with it. And you also realize the importance of it. And that's where I think RegTech will help, that we can marry the RegTech so we don't have to bother so much about the regulatory requirements.
Yes. Thanks. There's a question from Nitin Kumar. Is cryptocurrency regulated? If yes, who regulates it? Investment in Ethereum is safe in India?
What I heard about from India, you guys can chip in more. What I heard in India, it is not allowed. So regulation-wise, cryptocurrency is not regulated globally by any entity. And that's the beauty of the cryptocurrency, like kind of Bitcoin. So it's not regulated globally, but country-wise, they have come up with their own regulations where they don't allow it as a valid mode of payment or mode of investment. Like in Indonesia, it is allowed to a certain extent that you can buy some cryptocurrency, but you cannot make a payment in cryptocurrency. In India, I understand that even if you have cryptocurrency, you cannot possibly declare it in your will or something like that. So country to country different.
That's good.
And Vishal, you see that changing? Not banned it, semi-banned it, because they don't want to see it as a ban. But do you see that changing overall? Do you see that cryptocurrency going, and it went through a plus, then it went to a minus? Where is it headed to?
So cryptocurrency rules would change as you will see that the countries themselves will come up with their own digital currencies. Yeah, so own cryptocurrencies. The countries which are advanced working on it, China is right now quite advanced in it. Estonia, as a small country, has launched its own cryptocurrency. In Europe, the conversation is already quite advanced, where they are trying to form, BIS is forming their own cryptocurrency. So what you will see is that now, especially because of Libra, while Libra may not be the future because of obvious friction with Facebook, but Libra has pushed the adoption of digital currencies and creation of digital currencies by many countries. What is yet to be seen is that will there be one currency which becomes more prominent? Time will tell. But what you will see is that you will soon be allowed to trade in the cryptocurrencies and all as the countries legitimize it.
Thanks. There's a question, it's a long one, from Sanjay Asudani. Hi, Vishal and Nikhil. Thanks for the session and insights on the future of banking. From a consumer perspective, how trustworthy is digital transformation? For example, let's say if in 5 to 10 years, what if the stakeholders change? Regulators may have minimal indulgence in the policies, etc. How safe it is?
How trustworthy, how safe it is. Safety in terms that if you compare with the previous, now it is more about the cyber security. Right? So if you are looking at any user, when you are looking at a bank, or as a bank, when you are looking for the user, keep a huge focus on cyber security, because when you provide the user journey, it may be very convenient and the data and all are kept in a way that it can be scaled up. But once any hack happens, or once any kind of cyber hack happens, then there is a big problem in hand. So safety wise, it's just a function of that how much secure one company is doing it by keeping their cybersecurity protocols intact. And especially in cybersecurity protocols, what I've seen is, again, the same thing. Internal behavior is more important than just the tools. You can have the tools for the firewalls, those sort of tools, and who can come in your system and not. But where we have seen the most of the things which needs to be changed is how do you change the behavior of the people? Will they leave the laptop on? Will they take the laptop home? Those kind of small things. When they access certain websites, will they switch it off? Those are the behaviors which needs to be changed. That's more important.
There are a couple of questions around this, so I'll just frame one question. What are the career opportunities in digital banking that can be taken up?
So there is like from the side of creating a business opportunity for us. So you can be in business development where you can create a business opportunity for a bank. There you would be possibly thinking that which type of companies you can tie up with, and that's where the APIs and all will come in. Second comes in when you are creating a product, what kind of user journey. So if you specialize in user journey, and that is one area where I see there is still a lot of room for growth. If you can focus upon UX and UI combined and total journey for the user. And if you have the banking background, you can actually connect that very well. Because usually when we take a UX researcher from outside, they are not able to think that how the system will actually work, or which database will it access. And if you already know that it will be accessing your production database of the customers and where the PIIs are not there, then you can actually combine it much better. So these are the two areas where you can immediately have good learning and application.
Great. There's an anonymous question that how can I grow my career in investment banking as a fresher with well-known company? I think me and my team will take care of this.
Yes.
As a lead.
I can understand.
There is a question from Kanish. What future do we envisage in digital transformation in banking? How different will it be from what we discussed, that is mobile/internet banking?
So digital transformation within an existing bank is more about the mindset than the technology itself. So if you are seeing the top level of any bank, if they have suppose appointed transformation change management function, change management department, or they have made their CTO or CMO as a change management for transformation management. I see this in many companies where they have created a section which is in charge of the transformation. Then you can be mostly sure that it's not happening. So because you cannot change the mindset by just creating a certain function, you have to change every part of the business. So where you see the top management itself, they are themselves involved in changing, then the transformation would take place. So it's more than technology, it will be the way of thinking, the way of interacting with the customer.
There's a question that in case of data leak, how do you manage the situation or how to prevent such leaks? I think the latter part of the question you already answered.
Right. So primarily it depends on the amount, the kind of damage it has happened. Yeah. What you do is that you immediately contact the customers and all. It depends. If there is it's a very, very fluid situation in which, but usually what you need to keep in mind is that it's all about trust with the customers, and you build trust by transparency. So instead of that coming through a third party and all, if you are more forthcoming, if you know something has happened, that would build more trust with especially these millennials, customers, and Generation Z.
Thanks. We have 3 to 4 minutes, so I'll take a couple of questions more. I think this is typical to developing countries or rural areas. That the question goes, not all have laptops. Mobiles are considered by many as unsafe for banking. How do you plan to change this perception?
So mobile is smartphone or mobile is going to be the onboarding device. They won't be getting into the laptop. So the perception would be changed as they get onboarded through a small product. Instead of the full banking product, you can get them onboarded by a wallet. Just the easiest of them is the wallet. And on the wallet, you can give them the loan. And through that wallet, when they are using the funds in any grocery store or anywhere, that's where the usage will increase and the trust on it will increase. So it cannot be communicated to them that it is trustworthy, but it has to be displayed.
There is a question from Kanish. It's more about the investment decisions and the asset classes. So he's asking, I see many people being open to investing in stocks, mutual funds, SIPs, Bitcoins these days. How can this be accommodated into a banking system through a digital transformation that can be more seamless?
So in the banking system, if you think from the customer point of view, as you have rightly pointed out, that people are very much interested in these investments. Imagine your bank provides you a very seamless way of investing into all. So like you see the app like Robinhood. Imagine an app like Robinhood in your banking app, which also combines the trading in the cryptocurrencies. So you have cryptos, you have stocks, you have mutual funds, and you are within your bank. A much more comfortable journey for you.
Thank you.
And Vishal, you could trade globally, right? Like ideally, you should be able to trade globally.
Exactly.
I could pick up a stock in the US, a bond in Brazil, etc. That would be the futuristic type of thing. It doesn't seem so.
So yeah, there is an app called Saxo Bank. Yeah, there is an app called Saxo Bank. If you see, they are doing the similar thing. Robinhood is mostly US focused, but Saxo Banks provides you Australia, Brazil, or any stock exchange you want to buy, you can today buy on Saxo Bank.
Okay, let me go to, there's a valid question here. How critical is it to map the customer's journey or requirements before embarking on a digital journey?
Very, very important, very right question, and the most important. Don't go on the digital journey, because usually that is digitalizing. We just convert manual to digital. So as an example, if your traditional bank is giving out the loan in some fashion, that person meets the officer then writes the paper, then goes to credit committee and all. Without journey, what will happen is that you will digitize everything, but the flow will remain the same. And that's actually happening within the industry, and that's one of the biggest problem, actually good for the players like us, because that's where the competition is not able to then meet up. If you start with the user journey, then you completely rethink the flow.
Thank you. Vishal, I'll take two more questions and then we will end it. I know we have short the time. How do we ensure longevity of fintech startup solutions?
So longevity of any startup is being able to remove the pain of the customer and having a business model which will make money soon. Yeah. So that's the longevity that is the customer ready to pay more than your cost? Means it's a very old school, but eventually that will be the case. Unlike that which we read in media that keep making losses, the valuation can keep on going up and chasing the valuation. So longevity will depend upon the business model.
There are 3 to 4 questions, and again I'll compile it for you. That how will banking digitization in a country like India, where most of the population is either rural or they lack internet connectivity? What is it that you see in next 2 to 5 years?
Well, in India, because of the Geo, I think if somebody writes on that, because they are providing you the phones and the connection, right? So you have given them the device and the connection. After that, you just need to ride on by giving your app on it. So Geo is a huge accelerator and the kind of investment which they have just now taken on board. I would say definitely keep an eye on that to use that.
Great. So we will end it here. Nikhil and Vishal, thank you once again. Thank you very much. This was quite engaging. I would love to do many more sessions with you, Vishal.
Well, thank you. Thank you for your time.
Thank you. Thank you everyone for attending.
Okay, thanks Nikhil. Thanks all. Okay. And happy to connect with all. Yeah. Anytime, any sharing required, my LinkedIn is open and happy to share.
Thank you, Vishal.
Bye. Have a good day all. Thank you.